All right, guys, I'm just checking that we are live. Is now streaming. Okay, perfect. Okay, what is up? What's happening? Everybody, we are going to be diving straight into this today's lesson, and it is going to be a little advanced. Okay, today's lesson is going to be a little bit advanced. So if you're completely brand new, stay with me, and over the next couple of live sessions that I'm planning on doing, I expect that you're going to get it, you're going to understand it, and I urge you to go and practice. And don't risk any real money. It's all about practicing. If you're new, and you need to put all your money on the line, and it's not really. This is not about making lots of money very quickly. Okay, this is about perfecting your skills as an aspiring trader, so that you can acquire the independence, okay, that a lot of aspiring traders yearn to achieve. You can acquire the consistency, the reliability, okay, of being able to trade the financial markets without signals, without somebody telling you what to do, without having to rely on anybody else. Like, that's, for me, has been something that I've truly desired. Okay, in me as a trader, somebody who was just getting started, and watching a whole bunch of videos online and trying to figure out everything all by myself. The whole goal right from the beginning was that I wanted to be independent and not have to rely on other people, or not be fearful, not be overly greedy, and overcoming those challenges and finding neutrality has led me to the way that I trade, that I've been trading for the past 6 years. And again, I'm super excited to be sharing this with you. I'm just looking over there, I'm just making sure, checking that I'm still live. Okay, so I don't want to waste more time. I want to spend as much time as I possibly can just going over the strategy and breaking it down, and introducing you guys to it so that you can use it. Okay. And look, here's the purpose. Here's what I want you guys to do. I want you to use this strategy, okay, for free. Okay. And this is stuff that people pay tons of money for. Okay. People spend a lot of money to learn this, to go and get educated, to go out and people spend a lot of money to learn stuff like this. Okay, so I'm giving it to you guys for free. Why? Is because I want you to produce results. Okay, I want some results for yourself. I want you to see that yes, I can be consistent, I can be independent, I don't need to rely on other people, I can observe the markets myself. And look, we all have it within us, okay, the ability to recognize patterns. Okay, it's innate within us. In fact, we become experts at pattern recognition right from the moment we're born. We're recognizing patterns. Okay, um, and so, like, keep an open mind, kind of disconnect everything, maybe everything that you've learned, and only kind of bring into the forefront of your mind things that I've mentioned, and things that I mentioned that you're already familiar with. Okay, bring those to the forefront of your mind. So, as I was saying earlier, if you are brand new, then just kind of pay attention and learn as you're going along. This is really for those of you who already understand price action, okay, who understand candlestick patterns, and understand the basics, really, like candlesticks, basically, right? Your pin bars, your engulfing candles. There is a little bit more that I'd like to add to candlesticks. Okay, but let's dive straight into the strategy. Okay, the strategy, I call it the TLC method. Okay, the TLC method. All right, this stands for trend, levels, and then candlesticks. Okay, and I actually coined this term a couple of years ago. When a student asked me, he goes, "Man, look, if you was to just simplify your entire strategy and break it down, how would you just break it down to me and simplify it? And I told him, I say, look, I look for the trend, I identify my levels, and then I wait for candlesticks, because candlesticks, it's the closest thing that we have to being able to read what's happening right now in the markets. It's the closest thing that we have to being able to read what's happening right now. And a lot of the times you got to wait for a candlestick to close relative to your time frame that you're looking at. But that's the strategy. This is a strategy: trend, levels, and candlesticks. Okay. Now, before we get into it, I need you to take a screenshot of something. Okay, I need you to take a screenshot of this right now. Okay, take a picture of this, take a screenshot of this. This is the Fibonacci. Okay, and I'm not going to get too deep into it. I'm going to save that for another video. But I want you to set your fib levels with these descriptions so that it just makes it that little bit more easier for you guys. Okay, now for those of you who just a brief explanation on Fibonacci. It's not something like super overly complicated and technical, and this is not to even overwhelm you. In fact, this is the whole purpose is to simplify this. Okay, so this Fibonacci tool is, think of it as a ruler. Okay, think of it as a ruler. Think of it as a measuring device. We're measuring from one point to another point. That's all we're really doing. Okay, with this Fibonacci tool, we're using it as a ruler, as a measuring device, because what's the whole idea of trading? Okay, what are people struggling with? If you look up here inside the Facebook post, I done a poll. Most people, okay, the vast majority of people struggle. It's a psychological challenge, an emotional challenge that they experience. Okay, and I'll explain. It's not that it's a psychological and emotional. I mean, it is, but the main reason why most people experience this is simply because they don't have a strategy that they're confident in, and so then they fall into this emotional roller coaster. Okay, you can save yourself the heartache, the pain, the emotional journey of trying to figure it all out by having confidence in your strategy. That will alleviate all of that stress, all of that emotional challenges that a lot of people experience just by having a strategy. Okay, because when you have a strategy, you can start fine tuning your emotions. You can start identifying where it is that you can be doing better, getting on things that you can avoid, things that you can work on. But if you don't have a strategy, then how are you supposed to focus, hone in on your psychological challenges that you experience? Okay, so this is going to help you with your psychology and your emotions. Okay, why is because look, why the whole idea with trading is that we must know where we're going to enter. Okay, we must know where we're going to enter, why we're going to enter, how we're going to enter, where is our stop loss, where is our targets. Okay, once we're in a trade, how are we going to manage the trade, how are we going to trade our stop loss, how are we going to break even, how are we going to cut our losses short. Okay, because sometimes trades go against you, and sometimes we also have the ability to be able to cut our losses short. Okay, and a lot of people don't do that. There is an idea of set and forget, um, and you can do that. Okay, but what about when you're not setting and forgetting? What about when you have the opportunity to minimize your risk? This strategy is it's going to encompass that all of those components. Okay, it's within just this ruler itself. Okay, you can see we have our stop loss, our entries, okay, our targets. Okay, so T1, T2, T3, these are for targets. Okay, so take a snapshot of this, save it, go and add it to your fibs. All right, adjust your fibs. You can see here down here the levels. It's minus 0.272, it's target 2, minus 0.618, target 3. Now I usually I'll go in to give these levels meaning, okay, so that you can have more confidence in it. um, and just to kind of make it, just touch up on it a little bit. The reason why we're looking at these entry levels, okay, 61.8, 78.6, is because of a psychological phenomenon that occurs in the market. Okay, and that is most people buy too high and most people sell too low. Okay, these are just known common facts. Okay, people buy too high because of the fear of missing out and social proof. Okay, meaning because everyone else is doing it, let me get in on it too. Or because price is moving away and I might miss this move, let me get in now. Most people take breakouts. So the whole idea behind the TLC method, this strategy, is that we are only looking for retracements. Okay, we're not taking breakouts. Okay, in fact, you should already be in the trade before a breakout happens. If the breakout's happening, you should have already been in on that trade. How would you have got in on that trade? Okay, so now take a snapshot of this. Let's dive into the strategy. Okay, the strategy is very straightforward, very simple, and easy to understand. Okay, you see, the markets are always oscillating. They're always going up and down, oscillating. Okay, what I want to share with you guys is how many ways does the markets move? How many ways do they move? They're either going up, they're either going down. How are they going up and how are they going down? They create these peaks and valleys. Okay, your higher highs and your higher lows. Okay, here we have. Let me grab my pen here for you guys. Okay, we have these higher highs and higher lows, higher highs and higher lows. Okay, so we know for a fact. Okay, that most people buy high as price is going up. Okay, most those buyers start panicking as price goes down. Okay, and more times than not, price retraces deep enough for us to be able to get in on any potential upside move. Okay, on retracements. All right. So even without having to get into the trends and stuff, like let's quickly let me see. Let me quickly grab this slide here. Okay, here's uptrend. Okay, it consists of higher highs and higher lows. I know this is basic stuff, but hey, this is all that it is. Okay, trend levels and candlesticks. It's nothing too complicated. All right, so here we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. This is an uptrend, right? So let me ask you this, okay, guys. Let me ask you this. Hey, how many people are here? Hey, listen, if you guys are watching this right now, leave a comment saying that you can hear this, you can see. Okay, let me know you can hear me. Um, and there is going to be a delay, so by the time you hear me and leave a comment, it's going to be a couple minutes. Anyways, let me explain something about an uptrend. Okay, what's the point of calling an uptrend in hindsight once it's already happened when the best time to have gotten in on the uptrend is a couple of higher lows ago, right? What's the point of looking at this market and saying, oh, we're in an uptrend now, let's start looking to buy once it's already in an uptrend? Okay, if you look at the market in hindsight, you could have got in a lot more sooner. Okay, so here's where most people say an uptrend starts. Okay, most people in traditional trading education, you'll find most people call an uptrend after two higher highs. Okay, and two high lows. That's when people will look at the market and say, okay, now we're in a confirmed uptrend. Okay, that's when most people will say that we're in an uptrend, and same goes with the opposite. Okay, for me, okay, where does an uptrend start? An uptrend starts right from the moment prices already started moving up. That's when it starts. Okay, that's when we should already predetermine a possible uptrend. Okay, the same goes with a downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows. Oh, now we're in a downtrend. There's no point of calling a downtrend once it's already established itself. I mean, it's still tradable. You can still look for lower highs and look for possible selling opportunities. But you could have already got in there, hit your weekly targets, your monthly targets, and walked away from the markets. Okay. So, based on what I teach, based on what I share with my students, okay, an uptrend, we don't know. We don't know whether this market's going to be an uptrend or a downtrend. All we can do is predetermine the likelihood of an uptrend occurring. Okay. So what do we do? What am I doing? All I'm really doing is I'm looking for an impulsive move. Okay. Because the idea is that if price is to go up, if it's to go up, okay, it doesn't go up like this in a linear fashion and up and up and up forever. It can't do that. Okay, if it is to go from point A to point B, it typically oscillates. Okay, and I want to be able to get in on the first move. And so how do you do that? How do we look to get in on the first move of any possible likely potential uptrend. Okay, so here's what it looks like for me to look for buying opportunities. Okay, and this is it, by the way, and maybe even take a snapshot of this because I want you guys to practice this, especially if you really understand price action. This is going to be so much more easier for you guys. It's going to be very easy for you guys. Okay, perfect. I hear you guys. Let me give you guys a little shout out. Shout out to Mohammed, Joseph. Thank you guys for letting me know. Take a screenshot of this, okay? Because this is really all this is what my entire strategy boils down to, okay? It's actually this, as simple as this, okay? So what I'm looking for is, I'm saying that, hey, look, if an uptrend is to occur, it starts off, and all uptrends or downtrends starts off with just one move. Okay, I'll let the move play out. Okay, so here is a little turning point. Price starts going up, starts turning around. I'm already looking for possible buying opportunities. That's it. I'm looking for buying opportunities. What am I doing? I expect price to come down and retrace. Okay, for me to look for possible opportunities to get in, and then boom, we're now moving upwards. Okay, same goes in the opposite direction. I wait for price to come down first, and then I'll wait for a retracement. Okay, and so what I'm doing is I'm actually measuring two turning points. Okay, I'm measuring with two turning points, and so let's go and apply this to the charts. Okay, let me turn this video off because it's distracting me, and let's go and have a look at the charts, and have a look at maybe Dow Jones, because I posted some analysis on this the other day. All right, so here's Dow Jones, okay? And this is on the hourly time frame. And so what we're looking for is we're looking for both directions, okay? So we're looking for a down move, which we have here. Okay, so we see a down move, we see a down move. Okay, price has moved down, it hasn't retraced. And if we're going by candle, we see it's come down, it's gone up. Okay, we're not looking at this as an entire move because it hasn't made a deep enough retracement. Okay, it hasn't made a deep enough retracement. So what we're doing, we're just going to follow it. We're following it until it starts really turning around. And so boom, right here it starts turning around. So now we have two turning points, point A, okay, and point B, which is marked out in the fibs in the screenshot. Okay, so let's measure this, point A, point B, and you can see, okay, as price goes back up, we're looking for price action at these levels for possible shorting opportunities. Okay, and we actually had a nice price action pattern right there, a nice little pin bar off of the second entry. We're looking for possible shorts. Now, we have to be objective. We gotta remain objective, right? You know, because here we can very clearly see price has been moving upwards. Okay, came down, right? So we have a turning point here and a turning point up here, but all of this still remains within these 2 points. Okay, and so what do we do here? What we do here is we measure. Okay, we measure with our ruler those 2 turning points. Okay, and we're looking for an opportunity to go long right off of these entry points. Okay, again, followed by price action. Okay, so here's nice price action, and we came down. Okay, this is let me explain something about higher highs and higher lows to you guys. Okay, here we have a high, higher low. Okay, higher highs, right? Higher lows. Now here's the thing about higher lows, right? This isn't right here, isn't a higher low until we've actually created a higher high. That's not a higher low. You might think, well, how is that not a higher low? It's an anticipated and likely to be higher low. Okay, why do I say that? Okay, the reason why I say that is because we might not go and create a higher high. Okay, we might come down, break that low, and then move up and create a higher high, which means this becomes a higher low. All we can really say is these levels, this zone here is higher low territory. Okay, it's higher low territory. Okay. And so here we have, higher highs, higher lows, higher highs, higher lows, okay, higher lows territory. And we want to be able to get in for possible higher highs. But then we're also thinking about possible ranging markets, okay? And even a ranging market, it all starts off with a move up or a move down. That's how a range starts. That's how a trend starts. That's the first thing that happens before your head and shoulders. It's the first thing that happens before your double tops, your triple tops, your single tops. The first thing before any pattern occurs is price is either going up or it's either going down. So as soon as the candle opens, it's either going to go down or it's either going to go up. Okay, whichever way is it going to go. And if it's to start ranging, it'll come down and start ranging. And we want to be in before the range. What's the point of calling a range when it's already been arranged, right? We don't want to wait for 10, 15 touches, 100 touches before we get in. We want to be able to get in at the first opportunity, which gives us the highest of probability opportunities, okay? And so I want to quickly show this as an example, okay? Like you will notice that this is all I'm doing when I'm trading the market. It takes literally a minute to 2 minutes for me to be able to look for an opportunity in the markets, okay? So let's go and have a look at euro dollar for the week ahead, okay? We're going to look at euro dollar for the week ahead, all right? And so here on the daily time frame, okay, we're on the daily time frame, by the way, you might want to note this down. One of the things that I do, okay, at the end of every week I look at the weekly candle. At the end of every day I look at yesterday's candle, okay, keeping in mind of how last week's candle closed, okay. I don't need to overwhelm myself with all of these things that's happened here and then draw a trend line here, and then say we've just broken up here, we've got support down here and then support here and then up here, and you know we don't need to go so deep and clutter our charts and overwhelm ourselves with so much. I don't do that, okay. That's not the way that I personally am trading the markets, okay. It's a lot more simpler and a lot more psychologically pleasing, and aesthetically pleasing for the mind, the heart, the emotions, and everything else, okay. So let's start on the weekly candle and let's read last week's candle, okay. Let's describe last week's candle. Most people don't even know how to read candlesticks. Most people don't even know how to read candlesticks, okay. And this is something that I might have to just save for another lesson because there's so much to cover. Even though this is the simplest of approaches, there's a lot to cover. It's important that we know how to read candlesticks, okay. um, I'll give you a quick overview here, okay. I'll give you a quick overview, which again should still be pretty fairly simple for those who've been maybe trading for a while, okay. A candlestick, we have to be able to read the candlestick. What I mean by being able to read candlesticks is this, guys, okay. There's like hundreds of different names that we give candlestick patterns, okay. Your engulfing candles, your pin bars, your dojis, your dragons, your free soldiers, your dark hanging man, dragonfly, and there's like hundreds. There's so many different candlestick names, right? How you supposed to memorize them? How are you supposed to look at a pin bar? Maybe it's a pin bar, maybe it's not a pin bar. It doesn't look quite like a pin bar, and then go from it's far more important. Okay, get this. It's more important for you to be able to read the candlestick as opposed to just being able to classify and giving all these candlesticks names. Okay, why is that important? Why is that important? Because every moment in the market is unique. Every candlestick is unique. Okay, every moment in the market is unique. Every candlestick is unique. I'll give you an example here real quick. Okay, and let's just go. Let's go. Let's go here. Okay, let's do this. Delete, and I'll give you an example of what I mean here. Okay. Here we have two identical candles. Okay, are they both the same? Are these both candles the same? Okay, what do you think? Are these candles the same, guys? Let me see. Message. Leave a comment. Are these both the same candles? Would you say they're the same? All right. Yeah, by the time you guys are hearing that, it's already all right. Okay, let me know. Just leave it in the comment section. Okay, are these both candles the same? Are they the same? You know what? Most people say yes. Okay, they're exactly the same. Well, are they really? Okay, if every moment and every candle is unique, are they really the same? Because, right, this candle, it opened here. Okay, it came all the way down, it went all the way up, created the wick, this wick, there's a wick here. Okay, came down and closed, right? That would equals this hammer or pin bar or whatever, right? Whatever name you want to give this candle, right? On this side, we could have had the candle open here, go up, create the wick, come down, go up, range, drop all the way down, up, and then close equals the same candle. It's the same candle. But when you go and investigate the candle, you'll find that it's completely different. It's not the same. Okay. And this is why it's far more important for you to be able to read and understand a candlestick as opposed to just classifying and giving candlesticks names. Okay. So let's get into a little bit about candlesticks and my definition of how to go and read candlesticks. Okay, real quick. I'll be quick and brief with this here. Okay. What makes a bullish candle a bullish candle? Or what makes a bearish candle a bearish candle? It's very simple. Okay. If the close is above the open, it's bearish. If the close is below the can open, it's sorry. If the close is above the open, it's bullish. If the close is below the open, it's bearish. In fact, here's a quick description of a candlestick. Okay, here we go. There we go. This is the basics, touching up on the basics a little. All right. Here we have opens. They both opened. Okay, the open is the first thing that happens. Okay, if we close above the open, it's bullish. If we close below the open, it's bearish. Okay, that's what makes a candle bullish or bearish. Now, okay, here's what we're looking at. All right, if we take any given candle and we just mark out an invisible 50%, 50 halfway of the candle. If this is the high and if this is the low, where's halfway? Halfway is here. Okay, once you have your halfway marked out, we want to ask ourselves, where did the candle close? Did it close up here? Did it close down here? Where did the candle close? Because depending on where the candle closed, the weaker it is. So if we close below, it's weak. If we close above, it's strong. Okay, so this is how I determine whether a candlestick is a strong candle or a weak candle, a strong candle or a weak candle. So we can have a bullish, strong candle, okay, or we could have a bullish, weak candle. It's still bullish. It's a white candle. The close is above the open. It's a bullish candle. That's what makes it a bullish candle. Okay, or green candle, whatever color you have, right? If the close is above the open, it's still bullish. But is it a strong bullish or a weak bullish? Okay. And if the close in this case is below, okay, the 50%, and the closer the close is to the low, the weaker it is. The closer the close is to the high, the stronger it is. Okay, so I'll do a separate video on this and really breaking it down. But that's how I'll go about reading candles. So let's quickly go and describe. Let's look at this euro dollar. Okay, what is this candle? The close is very low, close to the low. It's very close to the low. It's a weak candle. It's a very weak candle. In fact, it's so weak, it's as if it's going to continue falling. Okay, now do we start selling now? Where's our stop loss going to be? Right, we need a reason to enter this trade. We need to find the opportunity in this trade. Maybe it's there, maybe it's not there. Okay, so that's last week's candle. Okay, as we come it down into the daily, okay, we're still focusing on last week's candle. Okay, 1 2 3 4 5. This is weekly high, weekly low. Okay, now Are we going to retrace back up into this candle? Okay. What if we don't? What if it's going to retrace up here and Korean coming down? How do we find an opportunity in here? Okay, now considering euro dollar is pretty weak, okay, and knowing that we're constantly looking for the trends. This is what we're doing, is we're looking for trends within that entire move. There's a trend inside it. That's what we're doing. So let's look inside. Let's have a look inside. Okay. We want to find a trend. Okay. We want to find that lower low and lower high. Okay. And so here we have it. Okay. Here we have a lower low, lower low, lower highs, lower lows, lower highs. This is yet to be confirmed. Okay. And here it's not a lower low. Okay. And so here's what I would do. Here's my analysis on euro dollar. Okay, is if I want to short this, I'll fib it from here to this low. Okay, and then I will wait for price to come up in to a level of interest. Okay, where I will look for following, price action. So trend, levels, and then candlesticks here. Okay, I have to wait for candlesticks, and then I'll take the trade. My stop loss up here. Okay, my targets are going to be down here. All right. Now, what if, okay, we can be more aggressive with this trade. What if we don't come up? And what if this is it? We've already made the move and now we're coming down. Then we're already on the hourly time frame. We can be more aggressive. Okay, we can be more aggressive and then look for a trend within that move itself. Okay, so look for a trend within this move, which we can see. Okay, and then fib it from here to here and look for an entry to go short. Okay, which by the way is plausible. You could do that. Okay, you could do this, right? It'll be ideal for you to have a lower low. It'll be ideal. Okay, so if we have, let's say the market opens and we just start falling. All right, so we can adjust our fib. We can adjust it because we now will have two different turning points. Okay, because we're always looking at this stream. So let's say market starts dropping. Here, this is what I'm looking for tomorrow. Okay, just see some comments here. All right. If the market starts dropping, I'll follow it. Okay, this is my high. Okay, if we don't create further lower lows, I'll keep it like this. Okay, if you create further lows, I'll adjust it and I'll keep focusing like this. Okay, and then I'll wait for price to come down. Okay, and then I'll wait for a retracement and then I'll look to short. This is my analysis on euro dollar. This is my short bias. This is my short bias. But I can tell you, most people are going to be selling. So that's my short bias, but I also want to create a long bias. I want to go long. Okay. I want to look for longs, sorry. Okay, so where is the best place to be looking for longs? We'll zoom out, and this entire move is this, if you go into the weekly, we need to, because we need to find levels. This entire section is as if price went up and now it's coming down and we're looking for longs. Okay, that's exactly what's happening here. Okay, so we can go from this low to this high to help us find some levels. Okay, and what do you know? Look what we have. Okay, we have price very close to 78.6 level. Okay, but we're coming down with an intense amount of weakness. Okay, that's weekly. Now in the daily, what I want to see here. Okay, if I am to go long, if I want to go here, what do I want to see? I want to see strong, long-tailed candles. Okay, strong. Okay, strong. So I need candles to close above the 50. I need candles to close here. Strong, weak. Okay, strong, weak. All right. I need strong, long-tailed candles. Okay, so this is a strong candle. I want to see something like that. I want to see a strong long tail. I want to see something like that. Like that. I want to see something like that. I want to see something like that. I want to see these types of candles. I want to see long tails as well. Okay, that's what I want to see. All right. Let's say that's what we see on the daily. Okay. for the week ahead on euro dollar, because this can't drop forever. We can't be dropping down forever. Okay, and if we are going to drop down, then we've already said where we want to go short from. Okay, if the next candle, tomorrow's candle, is going to be a weak candle, we want to get in on the retracement using our ruler to go short. Okay. By the way, guys, if you're watching and this is making sense or not making sense, uh, we're going to do a quick Q&A before we leave. Okay, before I conclude and patch up, we're going to do a Q&A. And if you like this and you want to see more of this stuff, then let me know. Okay, this is just one random. It's random, and I want to give you guys the strategy. But if you want to see more, let me know. Okay, so let me draw it out for you guys. Okay, let me draw out what it is that I want to see. Okay, here's what I want to see. Okay, currently, I think we're looking something like this. This is how this is how it's looking. On the daily, so I'm just drawing out what it looks like on the daily. Start. Okay, something like that. Let me see. Zoom in. Okay. All right, not too far off. All right, so something like this. Okay, that's what we're seeing. And we know the level is down here somewhere. Okay, so we have a level down here somewhere. Okay, I want to see these types of candles. I want to see this type of candle. That's what I want to see. Okay, I want to see something like that. That's what I want to see when we come down to the level. When I see that, that's the candle. Okay, what is it? Is it a pin bar? What is that candle? What name do you want to give it? That's not what matters. Okay, what matters is the psychology, the behavior inside the candle. How are people behaving inside that candle? Okay, so here I've kind of prepared a quick slide here for that. Okay, this is what I've prepared. Okay, so let's say we get something like this. Let's say we get a candle like this on the daily on euro dollar. Okay, Monday we close something like this. I don't know what's gonna happen on Monday. I'll update you guys and I'll let you know what I'm looking to do based on tomorrow's close. Okay, but let's say this is how we close, right? Then we need to understand what's happened inside this candle. Okay, and what's happening inside the candle on the hourly would be something like this, where price came down, went up, came down, went all the way up, came down, and then closed. Okay, here we have two turning points. The entire daily candle, I'll measure it from A to B, and then I'll wait. Okay, from A to B, and I'll wait for price to come down because I want to buy low. I want to buy as low as I can relative to the last candle, yesterday's candle. Okay, and what that basically means is this. Okay, same thing, right? We're looking for the price to go up, come down, and then we're looking to get in. Okay, we're looking to get in. So let me give you a quick example. For example, let's just say in the hourly. Okay, this was a perfect opportunity. All right, price went up, it went up. Okay, and who knows? What if this was going to turn around? Okay, so what are we doing? We are looking. Okay, we're waiting. Okay, here from the low to the high, we're waiting for price to turn around. Okay, waiting for price to turn around, come down into our level, and give us some price action here. Okay, but in here we got weakness, weakness, weakness. So no buying, no buying right now. Okay, that's euro dollar. Okay, dollar yen. Okay, in fact, dollar yen, I have a pending order here on dollar yen, and let's just delete everything off the chart, clean chart, and let's read. Okay, let's read what we're seeing here. Let's go into the weekly. We closed weekly. Okay, let's describe the weekly candle, last week's candle. Okay, Last week's candle was a weak candle. It's a bullish weak candle. Okay. So what happened in that week? We opened. Okay. Did we go down and then go up and then come down and close? Okay. Is that a sign of A, B, and then looking for longs? Okay. Some people might see this and be like, oh, we're short. We're going to go short. Let's sell, which again is plausible, right? We need to understand what happened inside that candle. Or did this candle open? Okay, we're talking about this one right here. Did it open? Right? Go up, create the wick, the high wick. Come down, create the low wick. Go up and closed here. That's a complete different psychology. We have two different ways that this market could, in this case, it looks like price went up, came down, and it's as if it's going to create a higher high. In this scenario here, it's as if the market came down and going to create a high and then lower low. We don't know. We need to go and see what's happening inside this, okay, and give it some context here, okay, because this could very easily continue moving up, right? So this is weekly. Let's go in the 4 hourly, because the 4 hourly, it's easier to read, and the reason why it's easier to read is because this represents 1 week. The period separators, that's a 1 week candle. From here to here is 1 week on the 4 hourly. This is one of the reasons why I like it. Okay. And so now let's read what's happened. Okay, so we opened, we went up, we came down, and up, came down, up, and then we dropped. Again, we went up, and look at all these tails. Okay, and we're just hovering right here. So all relative to. So we can see price went up. Here, based on this entire move, you would think price to come down and then look for longs. But what if it doesn't come here? What if it doesn't come here? If this is it, what if it turns around from here? What if it doesn't come here? We got to be prepared. Let's prepare for all possible outcomes. Okay, so here immediately I'm just going to look at last week's low, and then I'm going to keep an eye on these levels. In fact, we'll go down, and this is my analysis, by the way, and you can mark out the same levels, whatever. Here, right here, I'm going to be looking for opportunities to go long. Okay, that's done. Okay, I'm going to be looking for opportunities to go long. Now, this is long bias, and I'm going to create a few long biases. Okay, so here, okay, so this is a peak. So here, okay, I'm going to look for longs around here. Okay, because I see this as one move. It's a 4 hourly candle, right? But what if we come down and it's still weak and it's still, then what I do is I'll adjust. Okay, on the next levels. Okay, this level, all right, and I'll actually show you guys. Maybe I'll post some screenshots and show you what it is I'm looking at when we as Dolian plays out. Okay, so these are long. Okay, using this low, first it's going to be this. Okay, we're going to see how price is reacting. In fact, it's looking like we should be looking for longs along here. Okay, if we get stopped out, we want to get stopped out. You know what most people do, guys? What most people do is they enter a trade to, let's say they go long here. Okay, they want to buy, and really you should have a stop loss here. It should stop you out. You shouldn't be, oh, and price going against you, you're long here, and price now going against you, and like, oh, maybe I'll go long, maybe I'll just cut my, I'll hold on. No, this trade, you should have stopped you out ages ago. You should have accepted the loss. Again, if you manage risk, it's easy to accept the loss. Okay, and the next thing is down here. All right, because these are higher time frames, because this is one move, right? This is one move, right? But what if this carries on going up? Then you have to look at the move within the move up, looking at these trends up here. Okay, all right, so that's long. These are like 3 different scales of long opportunities. Okay, now we want to look for shorts, and shorts is very straightforward, which is right here. Okay, any any retracement back up to these highs, okay, I want to look for price action for shorts, okay, and target these lows, okay, for possible longs. So both directions. All right, very simple, straightforward. All right, look for longs along here, up here. Okay, let's quickly have a look at gold, okay, because I'm currently in gold. And as I do this, I want you guys to message me any questions. Sorry, not questions. Message me currency pairs you want me to analyze. Okay, go on, write them in right now. Let me know. Let me know what you want to see. Okay, let me know what price action you want to see. What pairs you want me to analyze. Okay, let me know what pairs you want me to analyze. The Forex Trader, Mr. Forex Trader, this is Epic Pen. It's called Epic Pen. You can download that. KFC, USD, LTD, USD, XAU, USD. Okay. Dale Nielsen, behave yourself, otherwise I'll kick you out. All right. Gold, anyways. So let's go ahead and look at gold. Okay, using the same strategy. Okay, same thing. All right. So up here, let's quickly have a look at weekly. Last week, okay, last week's candle. Okay. Last week's candle, strong candle, okay. And if it's strong, then we want to look for opportunities for possible retracements, okay, possible retracements and opportunities to go. Right? We are pretty high up, okay. We have to be aware of the fact that we're up here looking for longs. We're up here, okay. We're up here looking for longs. We're going to zoom in and we're going to start looking for trends in here. Okay, that's what we're doing. We're trying to find little trends, higher lows, get in, get our risk to reward and get out. Okay, because we're really high. When you're very high up in a trend on the higher time frame, as we are here, then the more cautious you want to be with taking profits, like get out quickly, get in, manage risk, and hit your targets and get out. Okay, the higher you are on an uptrend based on the higher time frame. Okay, so let's be objective. Yes, I'm already long on gold, but I'm not going to let that cloud my judgment. Okay, never let past experiences, your past winners, okay, make you overly excited, overly fearful. We don't want that. We want to always remain neutral and trade as if it's our first time trading. Okay, so last week was pretty strong. Let's have a look on the 4-hourly. Okay, and so if I want to go long, if I am to go long, just based on last week's candle, okay, we need to zoom in and look for opportunities to go long. So here we have price goes up, comes down, it's going up. Are we going to retrace down and turn around? Is it going to come down here and turn around? Is it going to come all the way down here and turn? What is it going to do? Nobody knows. Okay, all we can do is mark out predetermined levels. Okay, so here, boom, 1, 2, A, B, 2 turning, but this is yet to even turn around. We haven't even turned around yet. Okay, so looking like it wants to carry on going up. What if it is? So here's what we're doing. Is it going to come here and turn around? Is it going to go here and turn around? Is it going to go here and turn around? Is it going to go here and turn around? Is it going to go here and turn around? Remember, we're just sticking with one bias, which is go long. Let's go long. Okay. The opposite as well. Let's go short. Let's look for shorts. We want to remain neutral, right? Okay. So let's see. This is based on the weekly. Here's your levels. Okay. These are levels that I'm predetermined. I'm going to keep an eye out. We want to watch out for these levels. Okay, what if there's an opportunity down there? Okay, well, let's do that. Let's go in the hourly and let's look at, here's a quick tip. Okay, I'm not going to spend too when you're on the weekly and daily, you're looking at 1 year's worth of price data. Okay, when you're on the daily time frame, okay, these period separators, okay, we're talking about period separators, all right, just bear with me, guys. We're looking at the period, these period separators on the daily is 1 month, okay. The period separators on the weekly and daily is 1 year. Period separators on the 4 hourly. So if I go on the 4 hourly, these period separators here, from here to here, okay, on the 4 hourly equals 1 week. So I know I'm looking at the weekly candle on the 4. Last week we opened here. This is our low, this is our high, and that's our close. That's last week's candle, okay. And on the hourly, this is important because it helps you remind yourself about the time candle, okay. It helps you remind. So here on the hourly, from here to here is a daily candle, okay. All right, so if we, I'm going to quickly look at the daily and look at yesterday. Okay, so yesterday's candle is very strong. In fact, it's so strong, it's as if it's as if it's like this. It's so strong, it's as if it wants to go down a little bit and carry on going up. That's how it looks like, okay. So what do we do now? We go down to the hourly, okay, because remember this is our 4 hourly. We can fib it like this, okay, and we can look for here. Let's get rid of the 4 hourly because you know, when price gets there, you're gonna deal with it. Right now, we're all the way up here, and we want to buy, but we don't want to buy high. We don't want to take breakouts. Most people take breakouts. Okay, most people take breakouts. Anyway, so we want to look for retracement down into these levels. If we carry on, if tomorrow price carries on going higher, we'll follow it with the fib. Okay, until it retraces. Oh, my long. Now we can be even more aggressive. We can go in the 15-minute and we can be even more aggressive. Okay, we can say here high highs, high lows, high highs, high lows, high highs, high lows, high highs, and fib it from here to here. We can be even more, just as we mentioned on the weekly, the higher we are, the more less aggressive we become. And hey, look, this is still valid. This is still valid, but I don't go that deep into lower time frames. Okay, um, that's an opportunity. Target one, break even. But again, I stay in the high time frame, and I'm just going to stick with that. Okay, but this strategy, by the way, guys, okay, this strategy, it works for swing trading, intraday trading, it works for scalping. Okay, it's really good for scalping. Okay, but I only ever advise scalping to practice. Okay, never, I don't ever advise scalping for long-term trading. Okay, only for practice. All right, so real quick, okay, I know this is taking a little longer because I'm describing and descriptive and all that stuff, but remember, we're being objective, okay. So here, let's look for possible shorts, okay, because I am going to be start looking for shorts on gold here. Okay, so here's the point. Now let's measure it, okay, boom, and look, we're right at 78.6, but there's no price action. It's very strong, so I'm not going to look for shorts like that. I want to see something. I want to see some candlestick patterns, maybe the 4 hourly, 1 hourly short here. And so that's and this is another reason why, you know, you don't want to go in the lower time frame and buy here, because you're buying into levels you want to really sell based on the high time. Back for hourly, here's something I want to point out. Okay, this turning point and this turning point is within this high, this low. Okay, so this is a more valid fib, right? And so if we go like this from here to here, okay, I want to wait for 4 hourly, okay, price action in this zone for shorts, okay. And then let's say on the lower time frame, let's go on the hourly real quick. Okay, let's say we're here and here's our levels. Here's what I want to see. I want to see strong rejection. Okay, let's say price goes out, I want to see a strong rejection, and then I want to see a retracement where I can fib and then get into my levels and sell. Okay, this is a perfect example of my loss purchase. We're looking for sell opportunities. Okay, so we want price action. Okay, and again, for those of you who already understand price action, this is going to help. Let me quickly show you why I went long here. Okay, from this was a nice went up, came down, went up, came down, We rejected, came down. This was a 4-hourly pin. That was a 4-hourly pin right there. And then I fibbed it again. We went up, came down, right there. Okay, in fact, I'll fib it. I'll fib it for you. Okay, fibbed yesterday's low, yesterday's high. Sorry, in that moment it was there. I'll zoom in. Okay. Got in on this trade. Right there. Okay, looking at the entry stop loss there, and then we went up. There was another opportunity. We went up, and I held on. That's I'm sharing with you guys. Okay, all right. So I've shown you longs, I've shown you shorts, and essentially what I'm looking for. So let's quickly have a look at you guys. Okay, so thank you, USD CAD. Let's do USD CAD. Let's quickly do USD CAD. Template. All right. USD CAD period separators. Let's go on the weekly time frame. Let's, in fact, let me see something in the monthly. We month's high. Okay. Now we're working. Let's see. Yes, the best place to observe monthly time frame is on the daily. Okay, so monthly, weekly. Okay, so let's look at how closed. Last week closed pretty weak. Okay, last week closed pretty weak. Okay, so now here's the question. All right, are we going to, now we close down like this, are we going to go up, retrace, and come down? Okay, and okay, all of this, all right, all of this, I wouldn't even say this is a lower low. Okay, so last year's high, this is weekly period separators, 1 year. Okay, I need to understand what I'm doing here. Okay, 1 year. So last year's high, last year's low. Look where we moved off from. Okay, look where we moved off from. We moved off from 61.8. So it's an interesting level already. Okay, so how did we leave that level? Let's go and observe 4 hourly. All right, here we go. Okay, we're in the 4 hourly now. Okay, now rejected. Remember, what are we looking for? We're looking for, if a downtrend is going to initiate now, if the downtrend is going to start, we don't want to see lower lows, lower lows, low. Oh, we're in a downtrend now. We don't want that. That's not what we want. Okay, we want to be in on this, and maybe we're looking for longs. Maybe that we're looking for longs as well. Okay, and prices come down, and oh, we're in a downtrend now. No, we want to sell high and we want to buy low relative to this. So here's my analysis on dollar CAD. Okay, so here's long buys. I want price to come up into these levels. Okay, I want price to come up into these levels, and I want price action. This is price action community, guys. Thank you, the Forex trader. Yes, it's a surprisingly simple so here, I'll show you the levels. I showed it earlier. I guess you came late or something, but okay. So here's my analysis on dollar CAD for hourly. I'd say look for 4 hourly price entry. Look for those price actions along there. Okay, that's short opportunities. We need to be objective. Okay, what if this carries on going up? Okay, what if we're what if this is really going up? Okay, where do we fib from? What's appropriate? Where's a good level? In fact, let's look. Okay, and we are pretty high up. We're pretty high up in here. Okay, so I would say let's fib from just we're in the daily time frame. From here to here means 1 month. Okay, we're halfway through the month and we're dropping. Okay, are we going to break this month's low? What do you think everyone's going to do? What do you think most people will do when we break yesterday's high, or we break yesterday's low, or we break last month's low, or we break last week's low? What do you think most people do? When we start breaking lows, most people start selling low. Okay, so remember that was my short. What I just shown you was and short bias is up here. Okay, short bias is up here to short, right? Now my long bias is along here. So immediately, for those who are looking to trade uh, dollar CAD, okay, we can look for longs, but we want something like that. We want price to go up and then come down, where you might fib again. We might need to fib this again. Okay, okay. If you get that, we can look for longs. Price action will just go. Okay, but if we carry on falling, then we need to adjust our fib and then grab last week, the week before that low. Okay. There is something else that I do here, and that is I look at sentiment. So here's the fascinating why I love the way that I trade personally is now I've built a case. Guys, pay attention. I've built a case. I said, okay, this is what I want to do, and I want to sell. I want to look for shorts. I built a case for longs here. We're looking at long opportunities. We're looking for long opportunities. Okay. I use my levels, by the way. I'll mention that in a second. I built a case for longs. I built a case for shorts. Okay. Something that I do is I look at sentiment. Okay. I look at sentiment. All right. So here on dollar CAD, all right, on dollar CAD, 80% of traders that are trading dollar CAD are short. Everybody's short. Everyone's short. Where are they short from? They're short from 1.3180. Interesting. Let's have a look at that level. Okay. Let's have a look at that level. I know this is going on for too long. I do need to go as well. Sometimes I get a little bit excited. Okay. This is where most people are short from. Okay. And then just look at this. Okay. Fibbing it from here to here. Oh, it's coming back down. Yes. Yes, price is coming back. Most people are short here. Statistically, average. Most people are short from here. Look, price is up here. They're losing money. They're panicking. They're like, shit, let's buy. Price coming down. They're like, buy. Most people buy. We're gonna look to sell. That's if that happens. We're preparing. And if it does go up and then comes down, we can still look for buys. Okay, so that's what I do. I build a case for both long and short. And look what everyone else is doing, because everyone else is losing money. Most people lose money. In fact, hey, look, if we go and have a look at sentiment, you can see that if people, whether people are short or whether people are long, most people are losing money. Okay, look, minus. This is just a fact. Why? Most people buy too high and most people sell too low. And one of the main reasons why I do not take breakouts. Retracements carry much more statistics, carry much more higher risk to reward. Okay. All right. What else? That's a dollar CAD, pound yen. All right. Let's have a quick look at pound yen. And I'm just curious, do you guys like black and white or do you like red and green at random? I'm just curious. Anyways, let's quickly look at pound yen. Okay. All right. Immediately last week, strong bullish candle. Okay. But we're looking at this vicinity as well. We're looking at this candle relative to where everything else is. Okay. So we down. And if it's downtrend, like here, price came down, went up, ranged in here, but we're still looking for sales, right? Here, price came down, but it went up. Okay, price came down, it went up. Okay, even up here, price came down, it went up. Came down, it went up. Okay, we want to sell as high as we can. We want to sell as high as we can. So here, right off the bat, real quick, flip it from the high to the next low. It creates, mark the level. I look at the mark my future levels. When I draw my fib, it's future levels. Then I'll draw my support and resistance. And then I'll say, is it nice? Has it been used in the past? Okay, let's go up to 78.6. Okay. Maybe daily. Let's have a look at those levels actually. Okay, we want to see like kisses and touches, like really clean touches, and it's all right. It's not the best of levels. I've seen better levels, but hey, we're using these levels. In fact, it doesn't even draw properly. It's okay. Okay, it's all right. I like the price more than 45, 100, round number, 20. Okay, I have this 80-20 rule as well. Okay, so this is we're on the daily. Let's zoom in. Dollar yen, guys. Okay, we're on the daily, and so hey, look, price came down, went up, came down. What if it turns around from here? Okay, we can fib it again. We can fib it from here to here. Look at action on the lower time frame, but this one's more important because everything else falls within this high and this low. Okay, for the week ahead, let's go on the 4 hourly. Let's put our period separators on. Okay, if we come up to these highs, okay, we get to these highs, then yes, let's look for opportunities for possible shorts up on these levels. Okay, short opportunities from these levels. Okay, but what if we don't come to that highs? What if price came down and we're ranging, and this is it? What if I'll tell you, it's very likely that price is going to break these highs. Okay, why? It's because if this is going to drop, then a ranging market, what do you think most people are doing in a ranging market? Boom, they take the break. Most people take break. Most people are breakout traders. Okay, and I've mentioned this already. I do not take breakouts. If it breaks, let it break. Let it come down. I'll look for buys. Let it come down. I'll look for buys. Boom. I'll look for sales. Right. I'll also look for sales. Okay, but what if it doesn't come up to those highs? Okay, let's be objective. Well, then I'll go into the daily. I'll look for two. See, this is and where are we right now? Okay, let's get rid of this. Remember, just remember where we are. Okay, this is on the high time frame fib. These two levels that I've drawn, high time frame fibs. Maybe I should change the color on those. And this is the low daily time frame. Okay, and so we came up, we went into 61.8. There was a shorting opportunity there. Maybe you would have been able to short this. I mean, price came down, and now we're back into our first entry level. But let's read the candle. Look at the candle. A strong. It's too strong. Look at this candle. It's a strong long tail candle. So it's not looking like we should look to sell. Okay, but hey, let's observe. Let's actually have a look at it. Okay, we have some weakness. It's not the best of looking candles. Okay, okay. So what we've done is we've built a case for shorts. Okay, we're going to look for shorts along here. Okay, so these are three levels we can look for shorts. And just because price is here, we're not going to sell it. We're going to wait for price action. We're going to wait for price action. And if what we're looking, we want, boom, rejection, retracement, fib it again. Okay, come down and fib it again, and then maybe we can get in lower time frame price. And we're still on the 4 hourly, so zooming in will give us more room. Okay, and then here at the stop loss area, okay, okay, and even if you get stopped out, this one stops you out, this one stops you out. Boom, remember this is the higher time frame level. We can still continue looking for shorts. Okay, that's here's the interesting part. Okay, longs. Okay, so here we go. Okay, so now I'm seeing this. This is last week's candle, a retracement back into last week's candle. What if it doesn't come this up? Okay, then let's go into the daily. Let's look at the daily candle. Okay, let's fib yesterday. That's the daily. Go on the hourly. Okay, this actually looks a lot more appropriate. Okay, this is pretty much what we're to come into these levels, into these lows. It's already done it. Okay, but we be patient. We always be patient. We never fear of missing out. Okay, and boom, this is my pound dollar analysis on the hourly for longs, and then obviously as you've seen, set up here. Okay, all right, and then now I've built a case. Okay, I built a case for both long and shorts. I built a case for both long and shorts. Okay, we built a case. We're being objective. What do you think I'm going to do now? What do you think I'm going to do now? Put in the comments. What do you think I'm going to do? What do you think I'm going to do? Sentiment. That's right. Okay, we're gonna have a quick look at sentiment. Pound dollar. Everybody's short. Everybody's short. If everybody's short, we wanna give the bias of looking for longs. Remember, we said this is what we want to do for longs. This is what we're gonna do for shorts. We are going to give the sentiment for for our longs a little bit more of emphasis. Okay, so go into the hourly and say, hey, look, long is a little bit more appealing. Okay, so we'll stick with looking for longs. Again, we're looking for price action at those levels. Okay, sorry guys. Okay, this is as quick as analysis goes. All right, so basically be able to see how I look at the chart. Okay, pound Aussie is probably going to be looking very similar. So pound Aussie. So pound Aussie, right off the bat, we look at how last week closed. Okay. Okay, I want to sell as high as I possibly can based on last week. So this high right up here, fit this low. Okay. And then I want to see the Forex trader. You are a genius, guy. Good. Well done, Forex sentiment. All right, so we're gonna fib it because we want to sell as high as we can. We go in the 4 hourly. 4 hourly, we understand the candlesticks. Okay, boom. All right, and so here on the 4 hourly, okay, we want to sell as high as we can. Okay, so wait for some price action, maybe let it range for a little bit. Here's what we want to see. In these levels, we want to see this. Boom, rejection, some sort of opportunity. We want to see rejection, maybe even a range. Okay, we want to see price reject and go up. Okay, selling at the highest point is always going to be best. But what I'm saying is when price comes here, we want it to reject, retrace. If you take a trade right here, let's say you see a nice pin bar right here. Okay, you can sell it, stop loss up here. It's based on the weekly. You're trading the weekly time frame. Panic, let it do its thing, right? What I do is I like to double fib. I like to get a sniper entry, meaning, okay, I'm right here and I expect price to come down. And if price is going to come down, I go in the lower time frame inside this circle, inside the P1, it's going to come down. Does it drop like that? No. What I'm looking inside the circle, okay, is price goes up to the level, rejects it, retraces, and I'm in. Okay, so my stop is here as opposed to up here, so that I can stop me out and I can still look for shorts. Hope this is making sense, and I am going to release some more content simplifying this and explaining this even further. Okay, and so that's my shorts. Okay, and longs will be I'm going to base it just on yesterday's price. Okay, let's see how yesterday closed. Okay, yesterday looks pretty strong as well. So there's going to be two options. I can use days for yesterday's lows, day for yesterday's lows, and look at these levels. Okay, or I can look at there and look at these levels. Okay, but I would say this is more safer. And if market look, the levels look a little bit more cleaner. So that's pound Aussie. Okay, let's see, is there any more? Euro Swiss. I don't even look at Euro Swiss, but let's do it. Euro Swiss. Beauty, guys, when you know how to read. Stocks, crypto, it's all human behavior. Markets are going to open soon. Okay, let's do. Who wants to stick around for the market open? Let's see if the markets go nuts. Nah, it's too late. Actually, it's too late for the market open. Okay, what was it? Euro Swiss. Euro Swiss. Where are you? You guys trade Euro Swiss? Listen, guys, I want you to use this strategy, okay? I want you guys to use this strategy. Oh, there it is, Euro Swiss. Okay, again, guys, this is just my okay. Manage risk, always manage risk. You manage risk, you'll stick around for a long time. Okay, you don't manage risk, you're screwed. All right. I've never looked at Euro Swiss, but let's look at it. Euro looking pretty weak now, especially on the monthly. Okay, we'll grab this low, grab this high. Okay, and so we know most people panic and they start selling low. All right, we people take break. Okay, so we'll be surprised if we come down to this price level here. Okay, this is all my trading just is all based around psychological understanding of human behavior. Okay, um, anyway, so how did last week close? Last week closed very weak. Okay, last week closed very weak, but there's a wick. Okay, ideally I'd want it to come here. Maybe we can trade our way down to this level. Okay, maybe we can have something like this. See, very weak. Okay, maybe very weak. Okay, so a retracement back into that candle. So let's see if inside this candle, okay, if we can get a little retracement and down. Okay, let's see if that's plausible, if it's possible. Okay, let's go into the find a trend. Remember, trend, levels, candles. Okay, TLC. All right, and so boom, right here. There we go. Okay, there we go. Let's use this. Okay, 61.8 looks nice as a nice level. Is this making sense? Who said Euro Swiss? Sambulo! Sambulo Zulu! That's a sick name. I like that name. Okay, let's see. So this is it. Okay, so now here's the question. Okay, here's the question. Is it going to go up here and turn around? Is it going to go up here and turn around? Is it going to go up here? Where is it going to do? So let's prepare. So here's our levels. Okay, boom. This is it. I'm going to look for shorts off of these levels. Okay, that's it. That's my analysis done. Okay, now let's look on the daily real quick, because what if it doesn't come all the way to our levels? Okay. This is interesting, guys. Okay. All right. So you know what? If we actually go on the daily, that's the monthly candle. Okay. So that looks more appealing. It looks more attractive because we've just fibbed an entire month candle. Okay. But look at this candle. This candle is also interesting. Very strong. Look, let's go on the hourly, 4-hourly. Okay. We're going to use this high. Okay, because it's just simply a lower high. Okay. All right. So peak, low, peak, range, right? Peak, and then down here. All right. Okay. So now, boom. All right. Watch this level, guys. I'm telling you, watch this level. All right. Let's be objective. All right. This is where it gets fun because we can come down to the hourly and actually look to trade this, because this is good. Okay. Price went up, comes down, fib it, look to buy. That's it. Boom. Done. 2 seconds. Okay. Analysis done in 2 seconds. Okay, look to buy as low as you can into these levels. Okay, look, mark the level. Oh, let's look at this nice distance. Okay, all right, just do that. Okay, that's it. That's my analysis. Okay, anything else? Nothing else. Euro Swiss done. Okay. I'm going to give you a couple of seconds. Any questions? Answer my questions. Drop me your questions. I'll answer your questions. And for those of you who just need to quickly understand, this is really what we're doing. This strategy is simply this. Okay, we're looking for up move so that we can fib it. 2 points. Okay, 2 points, so we can look to buy. Up. Don't look at uptrend and say, oh, it's uptrend, because 1, 2, that's the most, everyone's always asking. Everyone's always looking for the holy grail. What's the most common pattern? Head and shoulders, double tops, triple tops. The common pattern, price either goes up or it goes down. Okay. And if it's to continue going up, it comes down before it goes up. And if it continues to, if it wants to continue going down, it goes up before it carries on coming down. That's the most common pattern. It's not a 1, 2, it's not even a 3-step move. Okay, it's 1, 2. You need to be looking to get in. Whether you get in here, whether you get in here, whether you get in here, you need to be looking to getting in. Okay, I hope this is making sense. Now the levels, okay, these are your levels. Okay, it's the Forex trader, the Forex trader. Here you go. Take a screenshot of this. And guys, I want you to give me feedback. Okay, I want you to trade this throughout next week. Okay, I want you to trade it, and I want you to show me your results. I want you guys to let me know how you guys are finding this strategy, because people pay money for this. All right, people actually, I have people who spend, you know, a lot of money for private coach to learn. I'm sharing with you guys for free. Okay, I want you guys to share your results with me. I want you to share an understanding. I want you to question what you're learning right now. Okay, I want you guys to question what you're learning right now. I want you to understand what it is that you're doing. Okay, and yes, I'm going to be doing more videos throughout the entire week, and then just to help a lot of you guys, we've turned off commenting because there's so many people who join my signal group, Telegram. I want to block all of these people. If you're here to spam, you're getting blocked. Okay, if you're here to learn, then we want to help you. Okay, because we know, I personally know what it's like to suck at trading. I know what it's like to suck. I know what it's like to find it difficult. Okay, all right, take a screenshot. Any questions? Okay, any questions? Message me right now. I'll give it about 5 minutes, and then I'm just gonna close it off. Okay, any questions? Guys, I'm looking for questions, and whilst I look for and wait for questions, right, I am quickly do analysis here on Dow Jones. Who trades Dow Jones? Anyone here trades Dow Jones? I love Dow Jones. Okay, um, real quick on the weekly. Okay, come down to 4 hourly. Here's is up. Okay, and these are going to be nice levels to be looking for long opportunities. Okay, that's it. And then I am going to look for short up here, but it's looking strong. So it's looking strong. So let's see if we can get any shorts up here. Maybe based on yesterday's candle, because yesterday was a weekday. Okay. All right. Another 2 minutes. If there's no questions, then we're done. We'll be closing off. I need to leave. Any questions? Just type away. It looks like nobody wants to have it. Nobody has any questions. That's fine. We're going to conclude. All right, it's been a pleasure, guys. Hope you guys get on really well. Manage risk as always. Updating you guys with screenshots on these trades. Some of them I'll take, some of them I won't take, some of them, you guys will take, and I want you to let me know whether you guys are taking them. Message me, hit me up if you have any questions. All right, have an amazing week. Let's crush it. Bye for now.